Hi there, it's Charles Kelly talking about property today, UK Property Talk. I want to give you 4 quick tips to help you save money, whether you're a property investor, whether you're a property landlord, developer, someone who buys and refurbishes, or just wants to know a little bit more about property. Well, the first tip I want to give you is on tax. Now, a lot of you might say, well, I've got an accountant, I don't need any tax advice. But is your accountant really giving you advice, or are they just doing your books at the end of the year? This is very important in any business, actually, that you have someone who can advise you on how to save tax, rather than just being at the end of the year saying, this is how much tax you owe, send off money to the HMRC and here's my invoice for £1,200 or whatever. You need someone to advise you on how to save tax. Now, I've had this problem myself over the years, and I've had to change accountants or go to meetings and network meetings to find out more about saving tax. I was at a networking meeting last night. I'd highly recommend you go to networking meetings like PIN and PPN. They're all over the UK, and you'll always learn something at these meetings. Last night there was a specialist tax advisor talking about how you can save money on capital allowances, on incorporation or whether not to incorporate. For instance, he said a lot of people have incorporated and spent a lot of money moving properties from their own name into limited companies unnecessarily because of this Section 24 tax changes. I'm not going to go into the whole details of that, but basically it pretty much only affects higher rate taxpayers. That's people who are paying higher rates of tax after all the deductions, which is over £50,000 now. So if you're earning less than that, it doesn't really affect you. So a lot of people got into a panic and sold off properties or put them into limited companies and paid taxes on capital gains taxes, or paid highly expensive tax advisors to move things around when they didn't really need to. Now, of course, if you've got large portfolios, and particularly over 5 properties, then you should be putting those into limited companies. And if you've got very large portfolios, then maybe it's worth biting the bullet now to save tax in the future. The other thing he talked about was inheritance tax, which you should take advice and planning for, because otherwise your heirs could end up losing 40% of the estate that's going to be passed to them. So look for ways to plan for that and talk to your tax advisor on that. So that's the first thing, is get a good accountant or tax advisor that specializes in property, that knows a little bit about, or knows about property really, and how to save money in property, because the government's hit us with all sorts of taxes recently, so it's important to get the right advice. The second thing is you should look to join discount clubs, discount savings clubs, which is kind of how organizations like Costco started, because you can absolutely save a fortune on anything you buy, from kitchen appliances to bathrooms to boilers to insurance. So by joining these discount clubs, which doesn't cost a lot of money, you can absolutely save fortunes. Like, they gave examples at a talk recently where people could pay up to £8,000-9,000 for a kitchen that they could get for £5,000 or £6,000. That's quite a big saving, thousands of pounds in savings for an annual fee of a couple of £100. And the way it works is that they have 5,000 members who purchase through them but not from them. So they still purchase directly from the retailers like Juicens and Magnets and these sorts of people that wouldn't deal with you direct on a trade basis. And the savings are passed on directly to you. Now, obviously, I think they must get something out of it. They must get either the membership fees or some sort of commission. I don't know how they earn the money, but it doesn't really matter, because the savings are substantial, and they can also teach you a lot about stuff that you're buying. For instance, a lot of people might be doing serviced accommodation. Now, rather than going trying to furnish it all yourself and put this, you can use companies that will just go in and furnish a place for you, put the furniture up there, take away all the rubbish. So you can almost have them go in there and do the whole job for you, rather than you trying to assemble stuff, which is a pain in the neck, isn't it? Self-assembly, the 2 worst words in the English language, in my opinion. Stuff from IKEA, which you have to assemble yourself and breaks after a couple of years. Well, you've got specialist companies that deal with landlords for HMOs, so they can advise you on buying the right stuff for HMOs. Yes, you can buy cheap, but will it last very long? I've had this experience myself where you get cheap beds, but they eventually collapse because they're just made of cardboard almost. So have a look at that. The company I'm looking at, I'm telling you about, is LMPG, which is Landlords Networking Purchasing Group. Great company, great organisation, lmpg.co.uk. I'll put a link up for that. The third thing you can do is networking. I've already talked about networking. There's property networking meetings all over the country run by PIN, PPN. I'd highly recommend you go to them. You'll always learn something. Network amongst yourselves, obviously, but if you talk to people, you'll always learn something. So, well, maybe you're paying something that you don't need to pay for. Maybe you're paying far too much for things. I'd also join landlords groups like NRLA if you're a landlord, but you can learn a lot from these networking groups. And secondly, fourthly, that's the first three things. The fourth things I would suggest to save money is to shop around to find cheaper fees for selling, letting and managing a property. Now, managing a property is not a one-off cost, that's an ongoing cost. So if you're a landlord that has property managers, you might be paying 8-10%, when you could get this quite a lot cheaper. Certainly at Open House, which is my company, we would offer landlords a substantial discount compared to the high street people who don't always do a good job, frankly. That's one of the reasons why I got into estate agency, because I dealt with estate agency over the years, and whilst I've got friends in the business and that sort of thing, they either don't want to manage properties because they think it's a pain in the neck, or if they do, they don't do it very well. And I've certainly had bad tenants put into my properties. I've got bad tenants in the house next door to me at the moment. So you need to be very careful how you vet tenants. It's not just about doing a credit search, but getting the right people that fits into your property. So that's why I got into property lettings and management and sales, because I think that I can do a better job. And another example is getting the property ready before people move in, rather than let them move in and then say this doesn't work, that doesn't work, this is not plumbed in properly. That's a real pain in the neck. Then you have to send tradesmen in, working around them and all that sort of thing. You should get the property right from the start. And I've only ever dealt with one company that used to operate in that way, where they'd get everything right. They'd get the place professionally clean, they'd make sure the curtains are up, they'd make sure everything is working, the lights are all working, there's bulbs and all these sorts of things before people move in, not afterwards. So they test everything. And unfortunately that company only had a limited amount of people they could deal with, so they were absolutely full up to. They were a husband and wife team, but they did a really good job, really professional job. So I would definitely shop around for that. And if you're not happy with your lettings team and you want to talk to me, just drop me a line here, and I can point you in the right direction, or maybe I can help if you come under my area. But I can certainly recommend somebody. Don't be complacent. It's a bit like your energy service provider. Don't be complacent. Don't be complacent with the same insurance every year. Do shop around and make changes, because loyalty doesn't always pay. Loyalty just almost sometimes leads to complacency with the suppliers that you're using. Okay, so those are the 4 tips. Get a good property tax accountant, join a discount club such as LMPG, networking of course, and shopping around for lower cost management fees and lettings and sales fees. I mean, Open House, we're doing a special offer this summer. Sell your house for £1,250, and this is in the Watford, Bushy, Borehamwood, Elstree and Borehamwood and Radlett area. Sell your property for £1,250, flat fee, no sale, no fee. We are a virtual agency, but we offer the normal traditional estate agency services, but at virtual agency prices. So we're not just going to take money up front from you and just let you get on with it. We do offer the proper service, and that's what I'm proud to be able to offer. A couple of other things in the news going on. We saw that the UK economy grew last month in May by 0.5%, but China's economy in the second quarter contracted by 2.5% because of things going on there with the return of this virus and lockdowns and all this sort of stuff. So that's a big problem for the world, because they've shut down their manufacturing in many places, so we're not getting the goods we need and we're paying more for things. So that's a bad sign. I talked also this week in my Money Tips podcast about how 4 regional banks in China actually shut their doors and had a run on the money in the bank, and there were mass protests, which was unusual for China. So the government had to step in and bail them out and basically give people the money that they were owed, because they couldn't get money out of the cash machines and that sort of thing. Now, a lot of people are, warning about this sort of thing, and we say, where is the economy going? And it depends who you talk to, it depends who you listen to, it depends on which economists you listen to. A lot of the doomsayers, we're doomed, they're saying it's all going back to, back to basics. We're going to be living in caves again, and we have to keep food underground and have guns and that sort of thing, like preppers. There's that side of things who say everything's going to collapse, so just buy gold and silver and everything will collapse. The dollar's going to collapse and all that. So there's that side of things. And then there are other people saying, well, we've had recessions before, we've had ups and downs, and things will recover. So I tend to be a little bit in the middle here. I think we could be going into recession in the UK and in the US, but whether it will be a long-term depression type of situation, I don't know. It depends on what the Federal Reserve do, it depends on what the banks do, but there definitely are problems in the economy, and we're seeing countries like Sri Lanka literally collapsing into chaos. But that doesn't mean everything collapses. I mean, as I said, it depends on who you listen to. If you listen to the gold buffs and people who are selling gold, like Peter Schiff, he'll say everything's going into gold and that sort of thing. He recommends buying gold and says that gold's going to be all the currencies are going to be linked to gold and that sort of thing, and the dollar's going to collapse. But then the dollar isn't collapsing, is it? The dollar is going up, because that is the world reserve currency, and it's the currency that's safe, and it's certainly safer than things like crypto. There are people who have been recommending crypto. They say we're all going to go into crypto, and everything's going to collapse. Well, that hasn't happened. Crypto's gone down. And, frankly, if you ask me, should you invest in crypto? Well, if you understand it, yeah, go ahead and put your money into crypto, but I'm not going to do that. I mean, crypto is supposed to be a replacement currency, and yet they want your dollars to buy it. So what do they do with your dollars? Do they just convert it into more crypto? I don't know. I mean, I'm just giving you a few examples. I know a lot of people have made fantastic profits on crypto, but you're kind of buying crypto to hope that it goes up in value. You can sell it to somebody else, or another sucker comes along and you sell the crypto and you get out. That's all it seems to be of any use for, like Bitcoin and that sort of thing. So I don't buy that. Where are property prices going? Well, yeah, you could say they've peaked, but then they keep going up. Last month in the UK, they went up again. There was the sharpest monthly rise in many years in property prices. But obviously, they can't keep going up forever, and it depends on what happens. Now, interest rates have gone up, but whether we'll be back to that sort of 1980s high interest rates when I remember paying a mortgage at 16.25%, I don't know. Because the central bank can't afford to keep putting up interest rates that much, because they're going to have to pay interest at higher rates themselves on the massive, multi-trillion-dollar government borrowing. So I don't think it's a problem. I don't think inflationary pressures are the same as they were all those years ago. So let's see what happens. Just I think you've got to just take a view and look at your own economy, not what everyone else is doing, but look at your own economy. What do you need? Do you need to save for retirement? Well, if you're saving for retirement in some lousy pension scheme, then maybe you need to start investing your money yourself into things like property to build up a retirement nest egg, in addition to what you're doing in the pensions. If you are retired and you haven't got enough income, maybe you need to think about moving your money out of the bank where they're paying you nothing into another form of investment, like direct investment in property, for instance, or you start talking to your financial advisors on what you can do to get a better return on your money. Because certainly in the bank, it's losing value. It's losing 8-9% every year, because banks are paying you next to nothing and inflation's eating away at your money. Now, if you're interested in higher yielding property at cheaper prices, where you can buy properties for 30, 40, 50,000 pounds and get up to a 14% yield on your money, fully managed, then talk to me. We've got some properties on our Facebook site. 2-bed house in the northeast, £36,000. 4-bed buy-to-let house that's already rented out for £59,000. Really good yields on those. Look at our Facebook page, which is facebook.com/ I won't read it out. I'll put a link up there, but it's basically the Open House South Herts Facebook page. Now, I know we're covering South Hertfordshire, but we've got an auction arm where we can sell auction properties, an online auction all over the country. We can also list your property for sale at auction with no fees to the seller. But we've definitely got some great bargains on our Facebook page for auction properties up north in the northeast, and if you want higher yields, if you're looking for more bang for your buck, then these seem to be the properties to go for. Now you might say the northeast is all desolate, but don't forget the government have this thing called levelling up, where they're investing hugely in the northeast, and I see there's a good future for that. And don't forget we've got a new Prime Minister come in, and the new Prime Ministers, the new people vying to become the leader of the Conservative Party and therefore the Prime Minister, are all talking about cutting taxes and ramping up the economy with perhaps more spending initiatives. So that could bring a change from the austerity measures that we've seen from the former Chancellor Rishi Sunak, who is also running for the top job. But who knows what will happen there. Liz Truss is in the running as well, and Penny Mordaunt is coming up like the dark horse coming through the rails there, could end up being the winner. We saw this before when people like John Major, who no one had ever heard of, took over when Maggie Thatcher was ousted by her own party, as they've ousted Boris Johnson. So have a look at that. Have a look at our Facebook page, and I will see you again on the next episode of Property Talk. This is Charles Kelly. Have a great day. Have a great weekend, whatever you're doing. Thanks a lot. Bye for now.